Welcome everybody again to another installment of Scott Talks. Today we have Sean Russell with us, which is a big deal today because Home Equity Bank is another part of our lender series that is very important this year, coming into this new age of mortgages as it's been for this last little while. I feel like everyone's adapting well, but it's sessions like this that are really going to take your knowledge of the products to the next level. Sean and I have kind of come together on this one in order to give you the basic information of what we need in order to get the chip mortgage across from the Home Equity Bank. I'm not going to steal his thunder. He's going to be the one getting into this. But at the end of this, Sean is your point of contact. So we'll have these videos set up for you that you can watch them anytime. But if there's anything that ever comes to mind, any deal submissions you want to talk about, please feel free to reach out to Sean. And that's part of the reason why we're here today, to talk about that. I also wanted to just mention to you guys as well, too, as I do in all these talks, it is a difficult time out there. I want you guys to be reaching out to me if there's any kind of issues with, if you're feeling down, if you're feeling like you're having trouble getting deals done. Don't be alone out there, guys. Mental health is a huge issue right now in this industry, as well as a huge issue in the world right now. And it's becoming more and more increasingly difficult for people to find what they're doing and be able to feel good about themselves. And so anything that I can do to help, please reach out, guys. I just let you guys know that every session that I'm always here for you guys. And we'll be sending out some chat line options for you guys along with this video as always too. So I don't want to get any further into that because today is a great session. Really looking forward to hearing what Sean has to say and really looking forward to hear what Home Equity Bank has to offer. So that being said, Sean, please let us know what we can or how you can help us today. And thanks for coming on to Scott Talks.
Scott, thank you so much. It's a great pleasure. I get the opportunity to do a lot of these sort of talks in my role. And I can tell you it's great. It's great for a lot of reasons. We've had the great fortune as a company to have done really well in the last 5-6 years. And I've had the pleasure of being with Home Equity Bank now for 6 years in my territory. And I can tell you in that time, we've seen immense growth, and it has a lot to do with the mortgage broker community. So today's talk, we're going to discuss exactly that, the opportunity that's presented to brokers with our product and our offering. And then we'll take a little bit of closer look at our features and benefits and the actual products that we have to offer. So I'll jump into that right now.
Wonderful.
So the first slide I always discuss when I have these sorts of talks, Scott, is I want to present the big picture opportunity. And what we know is that 45% of the households in Canada are the exact demographic that we work with at Home Equity Bank, which is the 55 years of age and older demographic. So really 1 in 2 houses are those individuals. And what we found is even though we've grown leaps and bounds in the last 5 years, and as a company, we probably have 99% of the market share, we know that we've just scratched the surface with this opportunity. And so for any brokers that haven't actually utilized our offering or worked with us yet, the time is now, because it's really an area where there's very little competition. And on that other side of the fence, where we have the 55% of the homes that are younger than the age of 55, Scott, we know what happens in those areas. There's a lot of competition. There's a lot of rate buy down. There's all sorts of things going on. But on our side, very little competition and a ripe opportunity to help these Canadian retirees. And so that leads us into the actual opportunity itself, which is what we call the $1 trillion opportunity. And all we're saying here is that the individuals that fit our demographic, if we look at the home equity that those individuals have as an aggregate, we're looking at over $1 trillion opportunity. And so some of the things that we know about this group is that 20% of our demographic is still paying for a mortgage. And this is frightening when you look at the debt levels that our demographic have. I mean, this is the time of your life where you want to really be enjoying things, and to think you might still have a mortgage payment or unsecured debt and these sorts of debt obligations, it's very troubling. And that leads us to the next point. I mean, 2/3 of those retirees have credit card debt still. And so they just don't have the cash flow to cover these needs and these situations that have occurred. And therefore, the chip reverse mortgage becomes a wonderful, wonderful opportunity. And again, looking big picture, 30,000 foot view, Scott, we know some stats that are really telling, really important. The first one is that half of Canadians aged 55 to 64 don't have an employer pension. And this is just a reality. And that number is going to grow. We're seeing employer pensions waning out. And therefore, we need to rely on our own resources to fund our retirements. And for many, many people, that becomes the equity in their home. And so we're seeing this grow and grow and grow as we move forward. Another point that we see is that, and this is a huge one, many Canadians outlive their assets. The average Canadian has $200,000 saved. And you and I both know that that will go real quick in retirement. It's not going to last very long. So we get knocks on our door at 71, 72, 74, 80, 81. Listen, great news. I'm living longer. I'm healthy. This is wonderful. I've run out of savings. I don't want to leave my home, but given that I might live a whole lot longer, I need to access some of that equity just to get by. And so that's what we're finding with this type of product and opportunity to help those. And the last point I'll mention on this slide, Scott, is the average expenses for Canadians 65 plus, which is about $60,000. But here's the problem. Their average income is only $40,000. So we're seeing seniors that are living in this home that they love. They don't want to move, but they're running a deficit. They don't even have the cash flow to maintain their existing lifestyle, let alone do anything outside of the ordinary. So it becomes really difficult. And once we're able to help somebody, it's a wonderful scenario. They're extremely happy. That leads me into just some of the base features and benefits for those of your listeners and viewers that might not know our product extremely well. I just want to touch on some of the main things for them. The first one is, we call it a purpose-built lifetime loan. And what I mean by this is a perpetual product. So a client takes a reverse mortgage, and many of our clients will age in place, Scott. And what that means is they will carry that reverse mortgage until they eventually pass away. That's many of our clients. Now, they do have the option to sell the property at any point and pay us back by all means, but many will actually pass away with the reverse mortgage in place. The second point, and this is the big one, this is really what makes a reverse mortgage, is the no regular payment. So there are no payments with our product. So this is a product that is growing over time. The good news is that the home, the full value of the home, is also appreciating at some arbitrary number. And so that's offsetting, Scott, a lot of the interest that's accumulating on the reverse mortgage. So it's a great 1-2 punch going on there.
Interesting.
We allow our clients to access up to a maximum of 55% loan to value. And so the way that works is there's 3 factors that we look at to provide loan to value for an individual. First and foremost is age, utmost importance. The older you are, Scott, the more loan to value we're going to offer. It sort of makes sense. The second part is the type of property. We're going to lend more on a detached versus a condo. And then the last part of the equation is the location. So you're going to get more loan to value in the GTA than you would say in Aurelia.
Just before you go on there, Russell, I hate to, Sean, sorry to interrupt you. Is there any areas you won't go?
Oh, great question. We lend right across Canada and we lend in all areas. So there are no areas that are exempt from our product. However, keep in mind, if you do go remote, there could be some lesser loan to values, but we'll lend everywhere, Scott.
That's wonderful, because we have a lot. We have Nova Scotia as well on this, or sorry, the East Coast entirely. I should say,
great.
Nova Scotia as well on this call. So it's GTA and East Coast.
Okay,
so
wonderful.
That's great to hear. I'm glad we can cater to both.
Yeah, we've got
fantastic.
Okay, excellent. And we've got a great presence on the East Coast. We've got a wonderful BDM out there. She does a great job. And yeah, so we do a lot of business out on the East Coast.
Great.
That leads us into our next point, Scott, and that's the no negative equity guarantee. Fancy word. Let me explain. One of the biggest objections that your agents, your brokers will face when talking about this product is a client will say, listen, Sean, this sounds great. I think it's going to be a wonderful fit, but I'm concerned that I'm going to outlive, or I'm going to live so long that the equity is going to be brought down to zero. And so I can tell you a couple things. That's not going to happen. It will, if it does happen, we guarantee that we'll cover any of that cost involved there. But here's the thing. We are so conservative with our loan to values that there's always going to be some equity remaining in the home, even if somebody lives to 90 years old, 95, 100, whatever it is. Because we're conservative with the amount that we provide and home prices are appreciating at some level, there's always going to be equity. Now, I'm not going to get into too much detail on this, but I think anybody listening in on this will know what happened in the US in 2007, 2008, the housing crisis. Terrible, terrible scenario. Some bad things happened there. Luckily, we've never experienced that, and hopefully we never will. But even if we did experience something that traumatic with home prices, again, as a company, we take any loss on that. We'll never ask a client for more money than they've already lent with us. And we put that right into our final contract that they sign at ILA. So there's absolutely no concerns on that.
Perfect. That's wonderful news.
And then the last point on this slide, Scott, is the fact that this is tax-free dollars. And this is a big one for many reasons. I mean, one, this is the equity in your principal residence, so it's tax-free. Clients don't have to alert the CRA to say we're doing this. It doesn't impact their pension income, none of that. And it's a great way for individuals to access a large chunk of money to utilize for, say, an investment property or a vacation property. So you're using tax-free dollars from your principal residence to do all sorts of different things.
Wow.
And so that's just going to lead me into my next slide. And this is really the product options. And so again, just given time, Scott, I'm not going to go into major detail on each one of these. I do want to allow individuals to contact me with any questions. But this is a great
this is a great slide I see here.
Great, what do you call it, sort of side-by-side comparison of our 4 product options, all of which are a reverse mortgage. And there's just different variations of those reverse mortgages. So the first one, Scott, is our lump sum product, the CHIP reverse mortgage. That actually accounts for probably about 90% of our business. And that is, a client applies for our product. We say you qualify for $300,000. They take the full $300,000. That's our main product. Product number 2 is the income advantage. And this is for those individuals that are looking for a monthly draw. So they're saying, Scott, I like this offering. I don't need $300,000 until that $300,000 runs out. So it's a nice income enhancement, if you will, for our retirees. The third one is called CHIP Max. And this one is actually just an extension of our lump sum product, Scott. And CHIP Max is designed to give our clients more loan to value than they would otherwise qualify for. So some of our clients need more than we're offering. That's just the unfortunate reality of what we do. And so the CHIP Max allows somebody to access more loan to value than they qualify for. Now with that, they're going to pay a higher interest rate. There's a couple stipulations that go with that. I won't go into details now. I'll answer those questions as we have any coming in later on.
Perfect.
The last option we have here is our CHIP Open product. This was created back in September of last year. It's a short-term product, and it's really geared for those individuals that are looking for bridge financing. They're looking for very short-term funding where they don't want to pay a prepayment penalty if they pay us back in a short period of time. So we created it for those reasons, and it's been very popular in the last 5 months that we've had it. It works really well. Again, you're going to pay a little bit of a higher interest rate. You're going to pay a little bit of a higher closing fee, but you will pay no penalties when you pay us back because it's geared for short-term use. So that really sums up our lineup, Scott. Very simple, very niche offering. We offer a reverse mortgage. That's all we do. And we have these 4 variations of that reverse mortgage. And so at this point, I'm just going to stop talking. I'm going to say thank you for the opportunity. And I look forward to answering any questions that come along as you go live with this next week. I'd be happy to do that.
So, Sean, I love how to the point this was, and this is the whole purpose of this situation, is to find out about this CHIP mortgage. And it's one of those ones that I've heard about so much in the industry, and it's been so, it's something that's happened as the age gap has become this point where over 55. That first statistic you put up there was pretty interesting to see that that's how many people are above 55 looking for home ownership at this time. So
yes,
and especially
yeah, exactly.
Like out in Nova Scotia and the East Coast and in some of the rural areas of Ontario now too, they're looking to purchase these new properties or refinance these new properties because they've
Yes.
moved away from these city centers and they've moved away to these places. So this is going to be something I think that will get a lot of traction for you. And guys, I know you're not live on the call, But what I'm doing with this recording, we're gonna have Sean's email in there. I want you guys to just send him anything you need to. I'll send Sean a list of your names as well too. So if he has anything that he wants to reach out to, or maybe just give you guys a quick call to say hi, he can do so himself. So I'm really looking forward to this relationship this year, Sean, with Home Equity Bank. And if you could send me the information for the East Coast um, BDM, that'd be great.
Absolutely. Absolutely. I will definitely email that to you.
Wonderful. So on that note, guys, I just wanted to say again, thank you so much to Sean. Thank you to Agostino Tuzzi for having you guys come out at Home Equity Bank. I knew Agostino back when I was at Home Trust, so
Nice.
he's a fantastic guy, and I look forward to working with both you guys this year. Home Equity, guys, is ready for your questions, ready for your business. So let's see what we can do to push some business that way to help your clients, because it's more ammunition for you guys and ensures that your clients stay with you and don't go anywhere else. So again, Sean, thank you so much for coming on, and we will chat with you soon.